Hello, I'm Hank Stoddard, Senior Industry Analyst Markets for Wars Intelligence. Today I'm going to be looking at the global five-year outlook for battery electric vehicles, or BEVs for short, and show how the period through 2025 is laying the foundation for an eventual surge in demand at some point beyond then, and toward what most of us assume is a tipping point from combustion engine vehicles. To begin with, based on our partner LMC Automotive's forecast, sales of BEVs will still be small relative to the overall market in 5 years, less than 10% of global volume in 2025. There will be strong year-over-year percentage growth in 21 and 22, then it slows but remains steady. A main reason for the near-term spike is due to a sudden increase in availability, as in there will be a dramatic rise in the number of new battery electric vehicles coming in the next couple years. So in part, huge near-term gains will be from more sales just because there will be a lot more BEVs to sell. There are 106 new BEVs being added globally this year and over 170 in the next 2 years, which will put the total at about 470 at the end of 2022. And by the end of 2025, based on current plans, that number will be approaching 600. That many vehicles coming in the near term will spread the pickings thin. By thin pickings, I mean the count of BEVs in production will rise faster than sales, and probably means a lot of the new BEVs won't make a success of it in the long run, and I would guess making it even tougher for the startups. But the bulk of new entries won't be from startups or newly created brands. They will come from established brands. In fact, the significant growth in the next 5 years in the number of BEVs, as well as sales volume, will be vehicles in mainstream segments from mainstream brands, not from premium price or economy priced vehicle groups, although both of those groups will have volume growth too. And the new BEVs from mainstream marks will be the core of the foundation being built. So ultimately what I'm saying is it means more BEVs sold by brands the average consumer might look at. Of course, they still mostly will be at the high end of the price range in those segments and brands, which is partly why sales are expected to still be under 10% of the global mix in 5 years. Though at that point, cost parity with internal combustion vehicles should be more even. Furthermore, there will be a big increase in the vehicle count among vehicles people want to buy, and that means cross-utility vehicles from those mainline brands. Though again, as a side note, the same pattern also will be true in the premium and economy type vehicles, though cars will maintain a majority presence in economy segmented BEVs. And most of those mainstream BEVs will be available in all major global regions, North America, Europe, and Asia, including the part of Asia that is the world's biggest market, China. And the same trend will be true for premium price segments, but not economy types. China basically will be the global market for economy BEVs. Drilling down further, volume centers geographically are and will be in 2025 China, the US, and the top 5 countries in Europe, which also pretty much are connected or close together geographically. Germany, the UK, France, Italy, and Spain. Together, these 7 countries will account for roughly 3/4 of BEV sales in 2020 and still account for about that much in 2025, though there will be some decline in share, which mostly can be attributed to the rest of Europe taking some away from the top 7. China will be by far the dominant market. The US will still be the second biggest market, even though there has been a pullback in future government mandates on fuel economy there, while Europe in general and China are pushing ahead with stiffer regulations. From a slightly broader view, the top 5 countries in Europe, which as I said are close together and except for the UK actually physically connected, will have stronger growth than the US or even North America overall. China, a region unto itself, will still dominate growth. In terms of market acceptance, although acceptance in this time frame always includes some government-related encouragement in one way or another, Norway will be in the spotlight because BEV penetration there will be pushing 90% by 2025. Among the major markets globally, penetration in each of the top 5 European countries referred to in the previous slide will be leaders in market penetration, or acceptance if you will, in 2025, with BEVs averaging about 17% of light vehicle sales in that group. To summarize, I see the next 5 years as building, or maybe more accurately put, as finishing off the foundation for the future of battery electric vehicles. Though when the tipping point where BEVs take over the majority of sales happens won't be for years or maybe even decades after that. Right now, most forecasts peg it somewhere between 2030 and 2040. By 2025, most, if not all, major manufacturers will have laid the groundwork for that tipping point, with most already betting on a shift to BEVs as a certainty. In fact, by 2025, there will be so much investment in the actual manufacturing of vehicles with battery electric powertrains, including dedicated BEV vehicle platforms, it might be too costly in itself to turn back the clock. And that ends this version of the Ward's Intelligence 6-minute webinars. Use the link below to see content you might have missed from our Summer Festival of Automotive, and thank you for watching.